Joining us now, JC Parets, Eagle Bay Capital founder and president. And JC, you just told me it's your favorite stock symbol, JC Parets.
That's right.
JC Penney. Is that why you love this stock? You just have the same initials.
Yeah, you know, I mean, in reality, one day I hope that it no longer exists so I could steal the ticker symbol for myself. But today we're bullish.
Let me get serious for a second, though, on that point. Stuff is happening with the company itself. For example, they just pushed back in this lawsuit that Martha Stewart had filed against it. Some people say that's why the stock. You say forget, that's just noise. Forget all that stock, just look at the charts. Doesn't that noise amount to anything?
It might, it may not. You know, so I'm not a journalist, I'm not an analyst. I don't have time to really worry about that stuff. We put money to work, so we're just really focused on supply and demand dynamics. And last time I was on the show, in fact, 4 months ago tomorrow, I was on the show, and we expected a 30% rally. And the biggest reason was because of the short interest. Remember, half the float was short. And at the time, the short ratio was about 4 days, which if you take the amount of shares short and the average daily volume, for all of the shorts to cover, it would have taken about 4 days. So what's interesting, this new phenomenon that we're watching, is that although the short interest has actually diminished to just 80 million shares, the amount of volume on a daily basis has shrunk to a third of what it was. So although the short interest has diminished, their short ratio is now up to 7.
Okay,
so
well
it's
then,
even more bullish than it was 4 months ago.
What do you think now then, JC? Because I'm looking at year over year, it's still down 45% year over year. I mean, granted, we've had this recent rally. What do you say now, though, going forward on it?
Right. So because the short ratio is almost twice as it was last time I was here, as the great philosopher Yogi Berra once said, it's like deja vu all over again. And I think we go up another 30% from here for the exact same reasons. It's the short interest. That's exactly right.
The Street Ratings team, and I don't say that they get everything right all the time, but they say about JC Penney the following: it is a sell. A hard sell. The company's weakness, and I'm quoting them here, can be seen in multiple areas such as generally high debt management risk, disappointing return on equity, poor profit margins, generally disappointing historical performance in the stock itself, and deteriorating net income. When you look at that slew of factors against it, how do you stand up?
David, 4 months ago, Liz told me the exact same thing, and my answer is the same as it is today. That's not a secret. If we're here talking about all these things, it's not anything new. It's already priced into the stock. There's a reason why there are so many shorts in this name. So I'd like to take the other side of that, especially if that's the consensus sort of agreement.
Well, let's talk about then business. I mean, this is a bricks and mortar business, and the criticism of JC Penney, the stores were getting old, the product selection was getting old. I mean, forget the Martha Stewart debacle. And then you've got Macy's that really has been still winning in that category, frankly. So how do you speak to the consumer out there who doesn't believe in the JC Penney story?
Right. So I'm not a storyteller. I like to look at supply and demand dynamics.
I'm trying to make you a storyteller.
Listen,
that's the story.
I don't have time to be telling stories. I can't worry about that stuff. I need to see where the buyers, where the sellers are. I see buyers here at 9 and change. There's a solid risk reward. If we break down below that $9 level, all bets are off, at least temporarily. But a 30% rally up towards 12.5, former support, great risk reward. And like I told Liz last time I was on, if we have a fixed level of risk, we know how much risk we're putting on, and we have a target, that's all that we need.
JC, when you are wrong, and it happens to everybody, don't tell me you're never wrong. When you are wrong, is it because you are focusing too much on your charts and missing something fundamental going on?
See, David, I'm wrong all the time, and I'm proud of that, because it doesn't matter if you're wrong as long as you're disciplined and you're defining your risk. That's the most important thing. There's no egos here. It's not about being right. It's about making money.
But has there ever been a case where a fundamental thing happens, so say the CEO gets sick?
Yeah.
Or something like that. And is that the reason why you're wrong, when you're wrong?
The reason doesn't matter. If it breaks below a certain level, you're disciplined and you get out. The reason is completely irrelevant.
You might be the most unflappable person I think that this
Yeah, he's great. He's great.
You're sticking with your story. All right,
he is reasonable. JC Parets, he was absolutely right on the first time. Let's see if it goes up another 30%. JC Parets, who has the same initials as the stock symbol for JC Penney.
Coincidence? I think not.
Thank you very much, JC. Well